He's back in Chicago, I believe, and probably recuperating after being on the Pro Farmer Crop Tour last week as one of the tour participants. Oliver, we enjoyed the reports that came out of that tour, but you had my sympathy when you were out there because that had to be somewhat just excruciating to go through the cornfields in that summer heat like that with heat indices, about 110 or so?
Yeah, 110, 115, and it really took me back to middle school, high school days of detasseling each and every summer. Not quite in the shape I was back then, but it was good to get out there and kind of see where things were looking with some real boots on the ground instead of just talking to clients and hearing about it. It was nice to really go see it for ourselves. And talking about that heat and temperature, I don't think that that's going to be doing any favors specifically for this soybean crop. And I think that's part of the reason why we're seeing this march back above that psychologically significant $14 handle. And if we can defend that, I think we could potentially retest those highs back from July 1420s to 1430s. If we get up there, I think producers should probably take a look at getting some protection on from those levels.
Now, from your perspective, what part of the tour were you on, the western leg or the eastern leg?
I was on the eastern leg, so we started in Ohio, worked our way into Indiana, Illinois, and Iowa. And I tell you what, on the first couple stops, it was all fairly uniform. But by the time we got to Iowa, it was all over the map. For corn yield checks, we were ranging anywhere from 80 on the bottom side up to 220. So I know, each and every year the word is variability, but in Iowa, that couldn't have rung truer. A lot of question marks out there. And that wasn't just on the eastern side, talking with guys on the western side of the tour as well. They were all over the map. So I think Iowa certainly caught a lot of attention, and that's going to be a big focus going forward as to where these crops end up. And obviously you're seeing the prices kind of reflect some of that uncertainty here as we start the week.
Let's take a look at the corn market right now. And on our quotes from Bar Chart, corn sold off after the opening bell for a little bit. I mean, it gave up much of its gains, but it rallied now. And now you have December corn at 494 3/4, within a penny of its high of the day, and we're up 6.5 now. So starting to regroup and stabilize and push upward. On soybeans, you have November up 17 at 1404 3/4. So pretty solid strength now in the corn and the soybean trade. Wheat started out on the weak side this morning. It's still lower in Chicago, but not as much. You have December down 6. We're at 615 3/4. Let's check out Kansas City. Here you go. December down 12.5 at 752. And on Minneapolis spring wheat trade right now, you are showing December down 5 3/4 at 796 1/4. What's it going to take to get this wheat market out of the dumps here?
That's a good question. It has just continued to be the anchor for the last couple of weeks. I would imagine that we see a bigger rally in the corn market. Potentially that would drag wheat with it. But I've been talking with guys throughout the morning, regardless of the question marks in Iowa over the corn market. I think soybeans is going to have to do the heavy lifting to get the corn futures back above last week's high and technical resistance from 502 to 506. So I think corn's going to have a hard time getting out above those levels, and I think that might be a little bit of a headwind for wheat as well, because if we get up to 502, 506 and fill, wouldn't be surprised to see sellers step back in. I don't think that would spill over to any sort of strength in the wheat market.
Are the funds short on wheat right now?
The funds are short and have been short. They've been covering a little bit here as of late. The interesting thing when we're talking about the fund positioning is the soybeans. They're net long just about 28,000 contracts or 58,000 contracts, which is really just a drop in the bucket. We've seen them as long as 190,000 contracts earlier in the year. So if this hot and dry weather does play out like the 6 to 10 day forecasts are showing, I think there's certainly some more opportunity for some weather premium to get these prices moving higher and get funds pressing the pedal to the metal a little bit more aggressively in that soybean market.
Well, the November soybean chart looks totally different than the December corn chart. The one is closer to the highs and the one is scraping the bottom of the barrel. I'll let you figure out which one. A hint of the corn is on the lower end. We'll come back in just a moment, and Oliver will take a look at our livestock trade to open up the week right after this.